everyone for logging into the Blue Springs Chamber of Commerce virtual power hour this morning. We have Trish and I saw Michael from the chamber logged in. I'm Laura Sipes, a Blue Springs independent human resource consultant. I'm a Blue Springs Chamber member and a volunteer for these power hour sessions. Leading the presentation this morning is Mr. Scott Fullerton from Fullerton CPAs. Scott will be covering the following topics: new due dates, CARES Act for businesses, and the CARES Act for individuals.
Thanks. I'm Scott Fullerton. My partner, Christy Bullard, and I own Fullerton CPAs. I will share my screen and we'll get right in. Hopefully you can see that. Okay. Yeah. So there seems like there's a whole lot of changes. There's not near the changes there was a couple of years ago, but there are some big changes. The biggest ones are the due date changes. Everybody's probably heard of the PPP loans. A lot of people have received them. The stimulus checks, the $1,200 plus $500 for kids 16 and under. That's been a big topic as well. And then various other things that may or may not affect your business. But I'll go through some of the bigger points. And let me know, Trish or Laura, if I need to accept people, because I think since I'm in control now, I might have to add people as they come on. The new due dates, April 15th is no longer this year. There was no need for an extension. It seemed kind of weird. We didn't even do extensions. April 15th is now July 15th. But you do have to, if you're going to go beyond July 15th, you do have to do an extension by July 15th, and that gets you to the normal October 15th for individuals or September for most businesses. So, interest and penalty free, and so if you did your tax return today and you owed, you do not have to pay until July 15th. Interest and penalty, instead of starting April 16th, starts July 16th. One of those, like I said, weird years. And it also applies to Missouri, Kansas, and Kansas City, Missouri. And the first and quarter estimates are also due July 15th as well for Missouri and Kansas. So nothing is due till July 15th, or almost nothing. So, and I said the extension needs to be filed if you're going to go beyond that. So the extension is for filing, of course, not for paying. So we'll jump right into what I've spent probably most of my day for the last 6 weeks is the PPP loan. It is exactly that. It's a loan. It's a 2-year, 1% interest loan. Everybody wants it because there's a big forgiveness piece to it. And I'll start off saying that SBA, Treasury, IRS, something changes on that every day. Every day. So the loan is 2.5 times what they consider your average monthly payroll. And we worked with probably 30 different banks on this with our clients. And it seems every bank had a different definition of what they call the average monthly payroll. Their calculators were a little different as they were trying to keep up with Treasury, the changes. But it is 2.5 times your average monthly payroll. They might forgive 8 weeks of payroll, plus additional expenses outlined in the CARES Act. And some of those additional expenses are rent, utilities. Utilities are defined as your basic utilities you think of, but also internet and cell phone or telephone. It's also available to the self-employed, sole proprietor, and independent contractors. You had to have net income on the base period, which is either last year or if you're brand new, some kind of a base period, maybe first quarter of 2020. So, we have resources on our website. Feel free to go out there. There's some resources out there that shows how to calculate the forgiveness. But like I said, some of that stuff is dated because it changes every day. And how to get the loan. I think the loan is the money's available is pretty much tapped out. They had a 350 billion they did early on, and then they came back and did it again. And that again is almost out, is my understanding. Currently, Treasury says the forgiven loan, the piece that you get forgiven. So say if you get 50 grand and you say you get 45,000 of that is forgiven, you have to pay that, what's not forgiven, back over a 2-year period. The 45,000 that's forgiven is tax-free income. The Treasury did say that, and that has not changed. The IRS came out a week ago and said, that's nice, but the expenses used for it are not deductible, which, if you think about it, it makes your loan, your forgiven part, taxable. So my profession and others are lobbying Congress. Congress is talking about it today, about trying to override the IRS and say those expenses are tax deductible, which would make your forgiven loan tax-free. But right now, if you get a loan forgiven, the $45,000 in my example of that payroll and rent that you paid for in those 2 months, that actually the government paid for you, would not be deductible. So FYI. There's also a deferral of employers' Social Security taxes. We do not recommend this. It's exactly what that means. If you're short on cash and you can't pay your Social Security taxes now, you can defer them till the end of this year, the end of next year. We don't recommend that, because if you can't pay them now, the last thing you want to do is owe the government for the employer Social Security taxes. The penalties are steep. We can think of very few scenarios that works for, unless you're very good at managing your debt, because that's going to be a debt, and it's the penalties on that are outrageous. So I wouldn't recommend it, but just know that's out there. And it's not a waiving of taxes. It's just, you just don't pay it now, you pay it later. Also for businesses, there's an employee retention credit. I'll start off saying, if you got the PPP loan, you cannot do this employee retention credit. We have quite a few, I shouldn't say quite a few, but we do have some clients that we talked into the employee retention credit and not doing the PPP loan, because they weren't going to have much payroll during this 8 weeks if they got the loan. They laid their employees off, or their just payroll is way down. Sometimes it's cyclical and they just don't have much in the summertime. But anyways, if you're not going to have the payroll to get the PPP loan forgiven, this makes more sense, the employee retention credit. It is a refundable tax credit against employment taxes. So say you pay somebody, it's a maximum of 10 grand. If you pay somebody $10,000, or the first $10,000 you pay them, you can get an employee retention credit of 50% of that. It's pretty sweet, and it's immediate, which means you don't pay in certain payroll taxes in your payroll deposit. And there's actually, if that's not enough, you can actually get an advance credit from the IRS. But it too can be somewhat complicated, but payroll systems can figure this out. I imagine accounting wizards and Bruce both have this figured out. And I know all the ADPs, the paychecks, all of them have this figured out. So it's not hard, but there's some things you have to do. Let me know if you have any questions on that. But again, if you got the PPP loan, you cannot do this. There's some paid sick leave credit and family leave credit. We have an employee here that took advantage of some of this. I should say take advantage of it. It's unfortunately they had to use it, but it's not because they had COVID-19, but it is because they had to stay home and care for school-age kids, and so they were able to take care of some of this. Again, this is some of these credits that you can't use when you're doing other things. You can't use the paid sick leave credit, family leave credit, and also the employee retention credit. You can kind of have both, but you can't use it for the same employees. So, let us know if you have any questions about that as well. That's pretty nice if your employees have to stay home and they cannot work. But there's certain options there that you can take advantage of. Bonus depreciation changes. This is one that Bruce and I hate. We like it, but it's retroactive to September 27th, 2017. This was something that was supposed to happen with the last tax law changes, starting with 2018. For some reason, it got left out. It was intended to be in there, but it didn't. And so with this, they kind of pushed this in, and it affects qualified improvement property on non-residential real estate. So if you have a commercial building, essentially is what they're talking about, and you do inside improvements, because it's only to the interior, you can now write off up to 100% of it. So before you had to write it off over 39 years. So that's a big change, having to write it off over 39 years to now you can expense the whole thing. So, and it's retroactive, so it might be worth either amending returns or filling out a form to be able to get this. So it can be a big game changer for a lot of people that are doing improvements. And it doesn't count for enlargements of the building, elevators, and structural improvements like new beams or stuff like that. So everybody's favorite, CARES Act for individuals, the stimulus checks. A lot of people have got them. My phone rings probably 10 times a day about people that, they have neighbors that got them, kids that got them, but they didn't get them. Their IRS is still cranking these out. If you think about it, IRS only has so much card stock to send checks. They can only print so many a week. I think it's something like 5 million checks a week that they can do, and they're also trying to send out refunds. Wow. And most of the IRS isn't working because they were sent home as well. So you got to bear with the IRS a little bit, and that's why they had this big push early on to try to get your bank information, and they're still trying to get your bank information. So if they don't have it, they have it if you're on Social Security. They have it if you're getting VA benefits. They have it if you got a refund direct deposited to your bank account in 2018 or 2019. But if you owed for 2018 and 2019 or not on Social Security or VA benefits, they don't have your bank information. And so maybe you got a neighbor that got it, you didn't. Well, you will, but it might be a little while because they're still trying to do the direct deposits. There is a link on the IRS website that you can put your bank information in. Doesn't always work. You have to have certain information. You have to have your adjusted gross income and what you owed or what your refund was. A lot of people are struggling with what exactly the adjusted gross income is. And so if you're a client of mine, give me a call and I can help you with that. But some of that you just need to be patient. And I will say that what this is it's an advance. And so if they used your 2018 or 2019 income and said, and you were over the limit, because there are income limits, and you were over the $115,000, and so everybody else got $1,200 and you only got $900. When you go do your tax return for 2020 tax return, and you say you haven't filed your 2019 tax return, they used your 18, your 2019's income was lower. You go to do your 2020 tax return, and you can get the other $300 or whatever you might not have gotten with the 2020 tax return. So that's some saving grace. I know you have to wait almost a year for it, but all of this will be shored up on your 2020 tax return, which also means your tax preparer, or you, if you do your own tax return, will also need to know how much you received, because it's something that's recorded on the 2020 tax return. Now, if you got too much, you don't have to pay it back. That's kind of the weird part. You don't have to pay back if you got too much, but you can get what you didn't get, what you feel you should have, or they feel you should have with that tax return. So again, the IRS is a little slow sending these out, and you should get a letter. Every taxpayer will receive a letter indicating what their amount is. You cannot call the IRS. They don't have a phone number for you to call. Most of the people answering the phone at the IRS isn't working. So they're not sending phone calls to the IRS employees' homes. So don't try calling the IRS. It's not going to work. Retirement distributions. So I've had a lot of calls about this, talked to a lot of people about this. They have waived the RMD, the required minimum distributions. For those that were 70 and a half and now it's 72, they have waived the RMD for IRAs, including inherited IRAs, which most of those are not 70 and a half yet. So they have waived the RMD for 2020 only. That doesn't mean you can still take it if you want to. But you don't have to, which is kind of nice, especially with the market down. I think that was the impetus behind this. The federal government didn't want you to take money out of your retirement because the market was down. So there is the ability to withdraw up to 100 grand from retirement accounts for COVID-19 related purposes without a 10% penalty. It can be tax-free. You have the ability to be able to pay it back. It's almost like a loan. So there is a caveat here where you can pay it back. And there's also where you could spread the tax on it over a 3-year period. So you need to talk to a tax professional and your financial advisor before you do this, but it might work for a lot of people. But just remember, if you feel the market is down, it might not be a good time to pull it out. So you may be able to take this distribution of you or your spouse, dependent is diagnosed with COVID-19, you experience adverse financial consequences. That's a broad definition. And so you're furloughed, you're laid off, reduction in work hours, inability to work because of childcare, reduced hours, or other reasons identified by the Treasury Department. It's pretty broad. So something to think about. There's also, you might think about converting to a Roth right now if you think the market is down. So, but I would put some studies into that, talk to your financial advisor about that as well. So. Charitable contributions, this isn't huge, but it does allow a new $300 charitable deduction on the front page of your tax return, your 1040. So before, to get a charitable donation, you had to itemize. And now you can give $300 even if you use standard deductions. So, which that's kind of a nice deal. I think that's a good idea. You can't do stock contributions, that's thrown in there, but if you do give $300 to Mary Lou, then the Rainbow Center or CSL or anybody else, you can get a deduction on your 1040. So it is not a dollar for dollar lower your tax. It lowers your income by $300, and then whatever tax bracket it happens to put you in. Prior to this, 60%, you couldn't give charity above your 60% of your adjusted gross income. If you made 100 grand, you could only give 60,000 to charity. That'd be a nice problem to have, but they waived that for 2020. Oops, sorry. Net operating losses. And so if you have a business that creates a net operating loss on your personal return, they got rid of the carryback starting with 2018, but then they decided with this, they want you to be able to carry it back, and you can carry it back 5 years. If you don't carry it back 5 years, it hasn't been around for a long time. So, and so if your business creates an NOL on your personal return, talk to your tax guy, gal. This can be helpful, because if you were in a high tax bracket last year, or especially 3 or 4 years ago when tax rates were higher, this can help you get money in a down year. I think there's going to be some businesses that need this. So that's something to think about.
Real quick, going back to the charitable contribution, is the $300 a one-time donation or $300 over the course of a year?
It's over the course of the year. So you don't have to give $300 just to the Rainbow Center or just to CSL. Yeah, you could give $25 here and there and everywhere else. When it accumulates to $300. And I think that's pretty much it. That's pretty much it for the tax changes. And then I've got quite a few slides here that just talks about things you kind of need to do now. Really, this now was about 8 weeks ago, 12 weeks ago. Talks about watching your cash. That's what it's all about. Cash might be your employees, how much your cash flow burn rate. This is some stuff that I can help you with, that T&T can help you with, Bruce can help you with. But and a lot of it's about being liquid, about being able to get loans. A lot of people, Bank 21 is on here, and I've talked to them about line of credits for clients. And a lot of people, they want a line of credit when things are bad. They don't think about it when things are good because they don't need it. But when things are good is when you need to line up your line of credits, your loans, so you can tap them when things are bad. So hopefully when things get back to normal, businesses start doing well again, that you start thinking about some of this cash flow, because we will have another downturn. We always do. So, but some of this, think about. And I'd be glad to help you with kind of going through your cash burn. I have worksheets and spreadsheets and everything else to kind of help you budget. A lot of people don't think about budgeting until it's too late. But yeah, and I can definitely help you. Sorry about that spin of that, but I can help you with kind of figure out the PPP loan forgiveness as well. We have some pretty fancy spreadsheets that kind of calculate that forgiveness. Any other questions? I know I kind of flew through that.
I don't see any in the group chat. Feel free to unmute yourself if you do have a question for Scott.
Yeah.
Good job, Scott.
Hey, thanks, Bruce. Yeah, the PPP loan is, man, that thing changes. Like I said, that thing changes every day. They're now coming out saying, if you can't prove that you needed it, or if you had liquidity somewhere else, that maybe you should pay it back. We had one client that was talking about paying it back, so they can, because if you pay it back, you can get this employee retention credit. You can't get this employee retention credit if you got the PPP loan. But the SBA Treasury has opened up you have until May 14th to be able to pay it back, and then you can do this employee retention credit, which may or may not be better for them, if their payroll is way down. But there's some other things that you have to do to go through this to be able to get the employee retention credit. Your income needs to be down as well. So something to think about. There's a lot to it. It's complicated. They've given small businesses a lot of options. Say that again, Bruce?
How do you know when or if your loan they might not forgive it?
That's a good question.
What would cause it to be not forgiven? So
you have to use, and so there's quite a few steps you have to go through to get it forgiven. So when you got the loan, you have to tell them how many employees you have. And so you have to bring back those employees to not get penalized by June 30th. They could mostly be laid off or unemployment, but you have to bring back your employees before June 30th or by June 30th. So that's part of it. You'll get penalized. But if they're on unemployment and you're not paying them this whole period, then you're probably not going to have the payroll dollar amounts that you're paying out to be able to get the loan forgiveness. That's really, the PPP loan is payroll protection program. They're trying to get people to not be on unemployment. My understanding from the feds is in 2008, 2009, 2010, the recovery took so long because they couldn't get people off of unemployment. Unemployment was, they got used to it, and they couldn't get, and states were extending it and extending and extending it, and they couldn't get them off unemployment. They couldn't get them back to work. It's about, they're pouring trillions into this to keep people off unemployment. I don't know why they gave everybody $600 from the feds on top of their unemployment if you want them off of unemployment, but that's my 2 cents. But you have to pay them. You have to have a certain amount of payroll in this 8-week period, which starts when you get the loan, when it hits your bank. And there's a 75-25, at least 75% of the forgiveness part has to be for the payroll. It's gross wages, it's your SUTA tax, it's not employer taxes, it's not withholdings from the employee. The only tax is SUTA tax, and then there's some employer paid health benefits and some employer paid retirement. That's a piece of that. Has to be 75% of the 100% of the forgiveness. If it's less than that, then it starts to offset some of the overall amount that can be forgiven. So there's like I said, I have this 3-sheet Excel spreadsheet that kind of goes through this. There's a max per employee in this 8-week period, but it's about payroll, number of employees, and then that other than the 75% can be used for rent and the utilities. So if you have a pretty high rent, it can help with that as well.
So we have another question, Scott. Same question regarding the EIDL loan.
Yeah.
Big mess.
Yeah, I mean the EIDL loan. So the EIDL loan is basically it's a disaster loan. It's been around for a long time. It's a similar loan that was used during Katrina and other disasters. It is a true SBA loan. You don't go through Bank 21 or any other banks. You go straight to the SBA to get this EIDL loan. When this whole PPP thing and all this came out, they said they had this $10,000 grant to it that can be forgiven. And so everybody early on was jumping on to try to get this $10,000. And about 2 weeks after they started that, before anybody got their money, they decided, we're going to tie it to number of employees. And so it's really, the grant piece is $1,000 per employee up to $10,000 grant. Very few people have got that $10,000. I think they're starting to send that out now. You can have the EIDL, the EIDL loan, and the PPP loan, but you can't use them for the same thing. And so you can't use the EIDL loan for the payroll that you're trying to get forgiven. I have some clients that did get both. You in the EIDL loan grant piece and say you got an EIDL loan of $300,000 and you have 10 employees, and so you got a $10,000 piece that's a grant, and you got the PPP loan. That $10,000 grant from the EIDL offsets what you can get forgiven on the PPP loan. So you can't double dip on tax-free part or the free part.
Okay, we have more questions. Let me get back up to the thing. Okay, who do you recommend that we reach out to on behalf of our clients to ask for the payroll, rent, utility expenses to be deducted? We have to fight for this for our clients. That was one from TNT Tax.
I think I understand that question. So, I mean, so every bank has kind of a different, I say that. I mean, the banks haven't really come out with a whole lot of guidance on what's going to be forgiven, because I think they know that it's still a moving target. SBA, Treasury, I think they're waiting for all the loans to stop, and the banks are just waiting on guidance from the SBA. But I would hope soon the banks will come out with some really good guidance on exactly what they need. But But it's my understanding to get the PPP loan forgiven, you're going to have to show that you paid the rent. So you're going to end up showing bank statements where the rent came out, canceled checks possibly. I'm pretty sure banks are going to ask for it because you can't just pay any kind of rent. It has to be rent that was in effect on February 15th in a lease agreement. And so if your lease agreement said that your rent is $2,500, you can't pay $5,000 a month for 2 months and get it forgiven. And so banks are probably going to ask for the lease agreement that shows what your rent should have been paid. And they're going to ask for proof that it was paid, which is the bank statements and or canceled checks. Same thing with utilities, the same thing.
Oh, sorry, go ahead. I thought you were done.
Oh, I am listening. Go ahead.
So the next question, I'm going to skip one and go because this one goes right to what you're talking about, the spreadsheets and tracking the PP expenses. How do you recommend tracking that in QuickBooks?
And so a lot of banks are saying that you should set up a separate bank account to have those costs come out of. We're not a big fan of that. We're not a big fan of you moving, say if you're using a payroll processing with ADP or any of the others or Intuit's full service. We're not a big fan of moving the withholdings and everything else to that bank account for 8 weeks. We prefer they didn't set up they can set up a separate bank account for that because some banks really want you to. But at the very beginning, this PPP loan is a loan, and so you debit the bank account, whatever it goes into, and you credit liability. It's a long-term 2-year liability. That's how we track it for our clients. We set up the liability, and then we hit that liability against it, or maybe do a sub account. I'll be glad to walk anybody through that, but it's not revenue until forgiven. So right now it's a loan. And some people that have set up separate bank accounts, we have them as payroll hits their other operating account or their payroll account, we have them transfer money over from that new bank account, so they could kind of watch the balance in that new bank account to see what they got left to try to get forgiven.
Okay, going back again, it still refers to the PPP, but this one, do you bring back some employees, or are they looking at headcount only?
They're not looking at just headcount only. It's a piece of it. Headcount is a piece of it, but you also have to be out of pocket for payroll. So payroll cost, yeah, it's both.
Okay. I don't see any more questions at this time.
All right. I'd be glad to share the Excel spreadsheet I have, especially with T&T and Bruce. If they want to see my Excel spreadsheet, I'd be glad to share it with them. So just have them email me.
Well, do you mind sending that our way for those that are trying to do this on their own, Scott?
Yeah.
Or, okay.
Yeah, there's a caveat in there that it was made. It was changed probably 4 or 5 days ago, and so if the SBA or anybody makes changes to the law, then it might not be current. I just want them to understand that. So.
Okay.
Yeah.
And we won't post it out, just if somebody asks, kind of deal.
Okay. Yeah, I'd be glad to share it with people that are on here. Anything else? Easy enough. Yeah, call me if you have, or email me if you have any questions about this.
Great. Thank you, Scott, so much for your time today. We appreciate it.
Yeah, thank you, Laura.
As far as contact information, do you have a slide, or can you post it in the?
Of course not.
Good note.
I am.
Slide had it on there.
I will post your email in the chat, Scott.
Okay, thanks.
Great. So for the next power hours, we're going to move away from the weekly power hours. Our next power hour will be back to our normal scheduled time at 8:30 a.m. to 10 a.m., but it will still be this will be on May the 19th, which is a Tuesday, so back on the Tuesday schedule. It will still be a virtual power hour, but again, it will be back at the 8:30 a.m. to 10 a.m. slot. The next power hour will be marketing and media strategist Brantley Ping provides a formula for creating a winning online video content strategy from planning, production, and editing all the way to delivery and search optimization. Take a look at your emails over the next few days. Additional information will be sent out as well as registration information.